Okay, so you guys have really been sending in some interesting stuff lately, and a lot of it is focused on Bitcoin.
Yeah.
It keeps popping up as being more and more important, and
Yeah.
I think we really need to dig into why that is.
Absolutely.
Especially when we're talking about, like,
Yeah.
Yeah.
these big institutions, like,
Yeah.
where does it fit in? What's its role?
Exactly.
Especially with all this, like, crazy, fast-moving tech stuff that's happening right now.
Yeah, for sure. And you've given me a bunch of research articles.
Little working yards.
Really rich set of sources to go through. So
Yeah.
what we're going to do today is really pull out like the most compelling reasons why this thing's gaining traction,
Right.
what its future role might look like.
Yeah, absolutely.
It's going to be fun.
So we've got some, like, really fascinating angles to explore here. We're going to be looking at Bitcoin's performance, like the data there is
Yeah.
pretty striking, and then its role in a portfolio, right? How it interacts with other assets.
Yeah.
And even like the early skepticism it faced.
Mm-hmm.
And then perhaps most crucially, its connection to these major technological shifts like AI.
Yeah, that's going to be fun.
Okay, so let's jump right in.
Let's do it.
Bitcoin as an undeniable force for institutional investors.
Wow.
That's a bold claim. What's the core of that argument?
So what really stands out is the performance data that you
Yeah.
shared with me, like the consistent year-over-year
Right.
increase in its value, especially when you look at like a 3-year moving average.
Yeah.
That's something that, these larger institutions are, it's becoming more and more difficult for them to just like overlook that.
Yeah.
You highlighted that its correlation to the S&P 500 has averaged around 0.1
Wow.
over the past 5 years,
Okay.
which is really low.
Really low.
A remarkably low figure.
Yeah.
That underscores its unique diversification power.
Mm-hmm.
So that, coupled with the sustained performance we've seen,
Right.
really shifts the conversation beyond just like,
Right.
speculative trading.
Okay, so 0.1 correlation to the S&P 500.
Yeah.
That is surprisingly low, so it's not really moving with the broader stock market.
Yeah.
And that leads into this whole idea of how it fits into like a diversified investment strategy.
Right.
Right.
Absolutely.
So can you explain how that low correlation
yeah,
makes Bitcoin so attractive from like a portfolio perspective?
absolutely. A cornerstone of modern portfolio theory is diversification. You don't want all of your investments reacting to the same market forces at the same time.
Right.
So the goal is to assemble a mix of assets that behave differently under various conditions.
Right.
So if one asset class takes a hit,
Mm-hmm.
others might hold their ground or even appreciate,
Yeah.
which helps to smooth out the volatility of the overall portfolio and can potentially improve returns for the level of risk taken.
Right.
Bitcoin's consistently low correlation with
Mhm.
other asset classes means it offers a hedge against downturns in traditional markets,
Right.
which provides that valuable diversification that these institutions are looking for, constantly seeking.
So it's not just about the high returns.
Right.
It's about building a more robust
Yeah.
and balanced portfolio that can weather
Yes, that's
different economic storms.
That's
Right.
exactly right.
And the argument is that given this characteristic and its sustained performance,
Yeah.
it's becoming almost a necessity for institutions
Yeah.
to consider.
Well, to at least consider it.
Yeah.
Yeah.
And it's evolving into like a fiduciary responsibility.
Well, that's what your sources are saying, right?
Yeah. So why is that?
Well, if your duty is to optimize portfolio performance and manage risk effectively for your clients,
Right.
and you have an asset that demonstrably offers those diversification benefits, you have an obligation
Yeah.
to at least understand its potential role. So by ignoring it, you're sort of neglecting a potentially valuable tool
All right.
that could be used to manage risk and enhance returns.
Right.
So it's all about fulfilling your duty
Yeah.
to your clients and to your investors.
Okay. That's a really compelling point. And I think
Mhm.
to help these traditional finance minds,
Yeah.
wrap their heads around Bitcoin,
Right.
there's this effort to frame its performance using those familiar metrics.
Yes.
Right.
Absolutely.
Things like compound annual growth rates,
Yep.
sharp ratios.
Uh-huh.
So could you just briefly explain what those are and why they matter in this context?
Certainly, compound annual growth rate, or CAGR, simply measures the average annual growth rate of an investment
Okay.
over a specified period, assuming profits are reinvested.
Okay.
Sharp and Sortino ratios are risk-adjusted performance metrics.
Mm-hmm.
Essentially, they tell investors how much return they're getting for the level of risk they're taking.
Right.
So by presenting Bitcoin's performance using these standard tools, it allows those analysts to compare it
Yeah.
directly to other asset classes within their existing framework.
Right.
And it moves the conversation beyond just the novelty of Bitcoin.
Okay, so we're kind of getting a clearer picture of why Bitcoin is becoming increasingly hard to ignore for these big players. But I kind of want to rewind a bit.
Okay.
You know, your involvement with Bitcoin goes back a ways.
Yeah, quite a ways.
So what was the environment like back in those early days?
Oh, it was dramatically different.
Yeah.
Bitcoin was largely seen as a niche technology, something for a very specific group of like early internet enthusiasts.
Right. And what kind of pushback did you experience?
Oh, mainstream finance was overwhelmingly skeptical.
Yeah.
They often dismissed it outright.
Right.
When I started publishing research in 2014 and then a white paper in 2015,
Yep.
the typical response ranged from polite disinterest to outright derision.
Wow, it must have felt like you were speaking different language.
Yeah, at times.
I felt like I was from another planet.
Really? But it's all good. So when did you start actually allocating to Bitcoin for clients?
So we began allocating to Bitcoin for clients in 2015 through the Grayscale Bitcoin Trust.
Okay.
Primarily because it was one of the few accessible avenues for traditional investors.
Right, yeah.
And that's when the real resistance intensified.
Really?
Even getting permission to include GBTC in a flagship ETF was an uphill battle.
Yeah.
Initially capped at a mere 1% allocation.
A 1% cap.
By the NYSE.
That seems almost symbolic now.
I know, right?
Yeah.
But at the time, it was a small victory just to gain that limited exposure.
Right.
Interestingly, as your sources highlight, there was no requirement to sell if the allocation grew beyond 1%.
Okay.
Due to price appreciation.
Yeah.
Which, in retrospect,
Yeah.
turned out to be a significant detail.
Yeah.
Then, as Bitcoin's price surged towards $20,000.
In late 2017, the internal pushback became even more pronounced.
Okay.
Major platforms like Merrill Lynch and Morgan Stanley
Right.
were very reluctant to onboard any ETF that held a significant amount of Bitcoin exposure.
Via GBTC.
Via GBTC.
So even when the performance was making headlines,
Yeah, absolutely.
there was still that hesitation.
There was a strong undercurrent of disbelief.
Yeah.
Significant concerns about its volatility
Right.
and what many perceived as a lack of fundamental value.
No.
The decision to remove GBTC from the flagship fund near that market peak while maintaining a smaller allocation in the next generation internet ETF was a direct consequence of that internal resistance and a recognition of the challenges in integrating such a disruptive asset into those established financial products.
So it was a real-world lesson in the inertia of large financial institutions.
Yeah, big time.
It really underscores how difficult it can be to shift those
Absolutely.
established paradigms,
Yes.
even when the data is there.
Right.
Okay, so now let's look at the present and the future.
Okay.
So Bitcoin isn't just viewed as this, like, isolated financial asset anymore.
It's not.
Right.
No.
Your sources really emphasize its role within a much broader technological revolution.
It is.
So can you elaborate on that?
This is where things become really fascinating.
Yeah.
Because Bitcoin and the underlying blockchain technology, they aren't operating in a vacuum.
Right.
They're part of a powerful convergence of 5 key innovation platforms.
Okay.
Robotics, energy storage, AI, blockchain technology, and multi-omic sequencing.
Okay, and just so we're all clear, multi-omic sequencing is basically...
Multi-omic sequencing is the large-scale analysis of different biological molecules, like DNA and RNA.
Got it.
And that has a lot of implications for healthcare and biotechnology.
Okay, so it's like they all work together, right?
Yeah, they're not independent trends. They're increasingly interconnected and amplifying each other's potential.
Like a synergistic effect.
Precisely.
Okay.
And acting as a central catalyst in this convergence. The heartbeat, if you will, is AI. AI is accelerating progress across all these fields.
Oh, how so?
Well, for instance, AI is being used to design more efficient batteries for energy storage.
Okay.
to create more sophisticated robots for automation.
Right.
And to analyze the massive data sets generated by multi-omic sequencing to unlock new medical breakthroughs.
Wow. Okay, so it's not just making things smarter.
Yeah.
It's making things cheaper.
It is.
Which is a very interesting twist on traditional deflationary fears.
Exactly. And that's what we call good deflation.
Good deflation.
Good deflation.
Okay.
It refers to the phenomenon of decreasing costs and increasing efficiency driven by technological advancement. As AI capabilities advance, it can automate complex tasks.
Right.
Optimize existing processes. And even discover entirely new, more cost-effective ways of doing things.
Right.
Ultimately leading to lower prices for goods and services. And increased overall productivity.
So it's deflation, but it's not because the economy's weak.
It's because innovation is making things more
accessible.
Accessible, exactly.
Okay, so now how do blockchain and Bitcoin fit into this AI-powered future?
This is where the truly transformative potential lies. This concept of agentic AI.
Agentic AI.
Agentic AI refers to autonomous AI agents capable of operating independently, making decisions and taking actions without constant human oversight.
Okay, so give me an example.
Imagine these AI agents performing complex tasks. Perhaps even starting and running entire decentralized autonomous organizations, or DAOs, powered by AI. These autonomous agents will need to interact with each other, exchange value, and execute agreements in a seamless and trustless manner.
Okay, and the argument is that our existing financial infrastructure
might not be ideally suited
for that.
For that kind of high-speed machine-to-machine interaction.
Right, okay.
Because our current fiat currency systems are largely designed for human-to-human or human-to-business transaction, and they often rely on intermediaries like banks for verification and settlement. So in a future where autonomous AI agents might be conducting millions of transactions per second,
through APIs.
Often through APIs. This intermediary-heavy system could become
a bottleneck.
Slow, inefficient, and costly blockchain technology. With its decentralized and permissionless nature. And crypto assets like Bitcoin offer a potential foundational infrastructure for this future, enabling peer-to-peer and API-to-API payments and value transfer without the need for those traditional intermediaries. Imagine an AI managing a fleet of autonomous vehicles. It needs to pay for charging, repairs, tolls. All of these things could potentially be microtransactions on a blockchain. And the speed and low fees of a system like Bitcoin's Lightning Network could be crucial.
So Bitcoin and blockchain could become like the underlying rails of this new AI-driven economy.
They offer a secure, transparent, and efficient mechanism for those agents to interact and transact, creating a whole new layer of the digital economy.
This is...
it's pretty mind-blowing.
This is fascinating to think about. Okay, I kind of want to pivot slightly and talk about the current global environment, We're in a period of like...
significant
uncertainty. How does Bitcoin's fixed supply characteristic play into that?
So in a world grappling with geopolitical instability, evolving economic policies, ongoing debates about inflation versus deflation, Bitcoin's fundamental characteristic of a fixed supply, that absolute cap of 21 million units, takes on a significant meaning. It stands in stark contrast to traditional fiat currencies, which can be created or expanded by central authorities.
So it offers like a...
It's like a...
verifiable digital scarcity.
Verifiable digital scarcity.
Okay.
And in an environment where the long-term value of those fiat currencies might be subject to question or potential erosion through inflation, that inherent scarcity becomes even more attractive as a potential store of value. Now, your sources draw an interesting parallel to the period following the 1970s, suggesting that the current convergence of technologies could usher in a period of significant productivity gains, potentially leading to lower than anticipated inflation. And even in that good deflation scenario, Bitcoin's fixed supply presents a unique characteristic in the monetary landscape.
And you also mentioned this idea of Bitcoin providing monetary competition to the U.S. dollar.
That's right.
So can you elaborate on that?
Sure. So while the U.S. dollar remains the dominant global reserve currency, Bitcoin's increasing adoption and acceptance
Right.
offer an alternative.
Okay.
This competition can exert pressure on monetary authorities to pursue sound and stable policies.
Right.
Furthermore, for emerging markets that grapple with volatile local currencies and often hold substantial dollar-denominated debt, Bitcoin could provide a more stable and accessible alternative store of value and medium of exchange.
Okay, so now this idea of governments holding Bitcoin as part of their reserves.
Yeah, that seems to be gaining traction.
Yeah, why is that?
Well, because the argument is being made that considering its potential as a long-term store of value and its growing relevance within the global financial system,
that holding Bitcoin could be a prudent strategic move for national governments.
Okay.
And we're seeing some U.S. states exploring legislation in this direction.
So how would they fund those reserves?
That's a great question. And your sources propose some intriguing possibilities, like leveraging existing government-held assets like gold reserves or even land holdings that are currently carried at cost.
So reallocating those?
Reallocating underutilized assets.
To gain exposure.
To gain exposure to this emerging global asset.
It's a
fascinating concept.
A really innovative way to think about it.
Yeah, it is.
Okay, so to kind of bring this all together, what are the key insights that you take away about Bitcoin's role, both now and in the future?
So the key takeaways are multifaceted.
Okay.
First, Bitcoin's consistent performance.
Yeah.
And its low correlation with traditional assets
present a compelling argument for its inclusion in diversified institutional portfolios.
Right.
It's transitioning from a niche asset to a potentially essential component for enhancing risk-adjusted returns.
Okay.
Second, while early adoption faced significant skepticism, the underlying technology and its potential continue to gain wider recognition. And third, Bitcoin is not an isolated financial instrument.
Right.
It's deeply integrated with the ongoing convergence of major technological innovations, particularly AI. And it has the potential to become critical infrastructure for a future characterized by autonomous systems and decentralized interactions. Finally, within the current uncertain global macroeconomic environment, its fixed supply and potential for monetary competition offer a unique value proposition.
So it's not just about price speculation.
It's not. It's about these fundamental shifts in technology, in finance, and even the potential architecture of our future global economy. It's pretty profound.
It really is, and it's really exciting.
Yeah, it's a lot to consider.
Yeah, so for you, the listener, we've explored Bitcoin's increasingly compelling performance and the diversification benefits it offers to large institutions. And we also look back at the early resistance.
Absolutely.
Faced by, those who saw its potential early on.
The pioneers.
Yeah, and perhaps most significantly, we examined how Bitcoin isn't just a financial asset. It's deeply interwoven.
Yeah, it really is.
With this unfolding convergence of transformative technologies within a very complex and ever-evolving global economy.
So many things to consider.
Yeah, and I think what's interesting is that all of these seemingly disparate threads, like the historical performance, the current technological advancements, and the broader macroeconomic context, all point towards a significant role for Bitcoin.
An evolving role.
An evolving role for Bitcoin.
Yeah, for sure.
So here's a final thought for you to consider.
Okay.
Given Bitcoin's fixed supply and its potential role as foundational infrastructure, in a future that's increasingly shaped by autonomous AI and decentralized systems, what might be the long-term implications for traditional finance and the very nature of value exchange as we know it? It's a lot to ponder.
It is.
As you navigate this rapidly changing world.
Yeah, it's definitely something to keep thinking about.
Absolutely.
Thanks for having me.
Thanks for taking this deep dive with us.
My pleasure.